Episode 74. Hey, Johnny, we are back in this mini series on life insurance. How is your life doing this week?
It's great, man. It's Christmas time, so
Yeah,
we are excited. Charlie Brown
absolutely.
Christmas, the best Christmas special of all time.
That's right.
My grandson loves it. We got the book, so we are ready to roll, man. It's
I
Christmas
love it.
movies and say watching the same ones you've seen 100 times, but it's like they're still
100
good.
times. Dude, I tell you, Home Alone and Home Alone 2 are like classics for me. I watch them every single year and I
I
laugh
know. I
insanely.
watch them every single year, like a few times.
I know it. It's like,
You
really?
know,
But they're so funny.
one of the
Um,
best scenes of all time, real quick, is in Home Alone 1 where Dan Stern's one of the criminals, not Joe
yeah.
Pesci, but the other one, when the Macaulay the kid puts the spider on his face
Yes.
and the way he screams.
And he screams. That
We all
scream is
can relate to that
iconic.
because we're like, can you imagine someone just sticking a spider right on top of your
Yeah.
big old fat
No.
spider while you're like, and you're watching it coming at you and you just sit there
No, no,
like
no, no. They'd have to
that
pay me
freaked me
big
out
bucks
too,
to get
man.
that.
Ugh.
Um,
But I love
yeah,
that part.
I
So
do too. I love there's so many we could have a Home Alone series, mini series here on this podcast because
I
I've
know.
watched it that many times. So, but instead of doing that, let's talk about how we can continue our mini series on life insurance. We've been talking about the permanent aspect of life insurance, how it builds cash value. We talked a little bit about how you can take some loans throughout life to pay for like air conditioning systems or cars or college or things. It's a loan, you pay it back, hopefully. But in retirement, talk about the benefits of having this pile of cash value in a permanent life insurance policy. How do you access that to get some tax-free income in retirement as part of a retirement plan? Unpack that for us.
So I'll zero in more on the fixed index universal life part of it, but
Okay.
the same concept can apply to like a traditional whole life with dividends. Some of these new, I should say, newer type of whole lives that build a higher cash value approach. So same concept. The other thing on the universal life, there are variable ones, which means
Mm-hmm.
that you can lose money. It's more tied into the market. Now the fees are
Okay.
higher, the costs are higher for those because all insurance products have a cost, right? The cost of
Right.
the insurance and maintenance fees and all this kind of stuff, but variable life should use a higher one. So we're going to talk more about the index universal life, or what if you're on the internet and you type in IUL, that's what that means, index
Okay.
universal life.
Okay.
Same thing applies to whole life, so to say. But remember, whole life is a fixed thing. I'm paying a certain
Right.
amount. This is what I'm paying. Whereas the universal life, in this case, the IUL, is a flexible thing. So uh, when you get one of these policies, regardless of your age, there's a premium level. There's a minimum premium that runs at like kind of like a term, right? It's
Yeah.
doesn't hardly build a lot of cash value, but I have this policy because later on, if I want to fund it more, I can fund it more to make it last longer if I need it, type thing.
Mm-hmm.
But there's also a maximum premium, which keeps the policy from being what's called a MEC, modified endowment contract. But all you need to really realize is as long as you stay from this maximum premium or under,
Yep.
all the cash value in there's tax free.
There you go.
Okay. When you begin to do loans for retirement. So if you overfund these or you max out your premium on these, and there's reports we can do, man, which are
Right.
incredible that show you that if you start one of these IULs, say you're in your 30s or 40s or
Right.
whatever it is, that because it's tax-free money, it can almost outperform or does outperform the value of a 401k. How's
Oh
that
yeah.
possible? Because remember, the 401ks generally are traditional IRAs, which are all taxable.
Right.
So I'm 66. I've been funding these 401ks, which is good, but I've got $900,000 in there. But I've
Yeah.
also been funding this index universal life, and I got $750,000 in there. Well, we know that a tax-free $750,000 is going to be more
Yeah.
than a $900,000 401k when you actually look at the value of them.
That's right.
Okay. So that's kind of a way you can approach these. Now, we teach a lot of people that, there's three buckets of money: taxable, tax money, and then tax free, like the Roths. Well, IUL can also be in that kind of the bucket, like a Roth of tax free
Right.
money.
Mm-hmm.
So if you are have a 401k and they pay up to 4% match, okay, do that 4%, but maybe also have a Roth and an IUL
Yes.
that you fund instead of putting it all into that 401k.
Yeah.
Let's see how the numbers look if you take that extra 8% you're paying and you use some of that to fund an IUL as well on your own.
Hmm.
Why would you do that? Well, because if you die, the money in the 401k is what your beneficiary is going to get.
Hmm.
Whereas if it's a life insurance policy, it's not just the money that's in the policy they're going to get, but what are they going to get? This big death benefit.
That's right.
So it provides you that feature as well, above and beyond cash value growth, which you can utilize for retirement. So anyway, you fund these things, you pump this money into it, and generally, if you can max it out, it's phenomenal. So you're getting them because they're life insurance, but you're also structuring it for a max out amount of premium. So if you say, I can save $800 a month outside to put in something,
Hmm.
that's what everything's calculated on. What does
Yeah.
this $800 a month do for me? It'll tell you how much life insurance you'll have based on $800 a month. But the most important thing is it shows you how it can potentially grow with these indexes.
Yeah.
So when you turn 66, I now have another income stream,
That's
tax
right.
free.
Tax
Okay.
free.
That you can turn on and begin to get loans against your policy that you can structure to go for 25 years, 30 years, 20 years. But if you die anytime in between, then your beneficiary will get um, whatever the death benefit still is. Now, we structure these a lot of times to where it's a $200,000 policy and the cash value is 80,000,
Hmm.
that the death benefit is the death benefit plus the 80,000.
Right.
As you start to draw money off of it, you're still going to get that death benefit plus whatever cash value is left in there when you
Yeah.
pass away.
Yeah.
So it makes your money more valuable. Why? Because it's tax free. And also, if you die, it's more
There's a much
valuable than just having it in a traditional investment.
right.
And
And
also,
when
if
you
you get sick, don't we've talked about that in the past with these
yeah.
accelerated benefit riders. Now you have a pot of money if you get sick with like a chronic illness or critical illness, more capital, more money I can utilize for those issues too. So it's threefold.
Yeah.
And utilizing it like an income stream is one of the best things you can do if you use it properly because
Hmm.
of the tax-free aspect of it.
Right.
It's
And
very powerful when you
it is
structure
because
it.
you always talk about that value equation that a lower amount of money tax free is value has more value than a higher amount of money taxable most of the time. And when you look at this, when people are in retirement, if they're taking money out of their IUL cash value to live on, tax free money, and we'll talk about this in an upcoming episode, it doesn't count against Social Security, right?
No,
And we'll talk about that in another episode. But the other thing is you structure it so that when you die, there's still a death benefit that your beneficiaries, your spouse or your kids, they're still going to get some tax free benefit from the life insurance. So there's so many ways that this can really amplify a retirement plan for an individual, a family, that you just need to sit down and have the discussion with Johnny and start to understand this and say, well, how could I use this? It's usually not the only thing you do, right? You've got 401ks, you've got Roths, you've got other things, but this is something that a lot of people don't really think about. And working with Johnny, he's going to help you just think about it and consider it and say, here's how this might work, right?
yeah, absolutely. And I think, maybe next week or whatever, but we can talk about the concept of even if you're a little older, you're retired or you're closer to it, how can you use one of these permanent insurance policies maybe to reach some of the goals you might have as well? So it's not like one of these things, well, man, I'm already 66 years old. I'm healthy, but what is this going to benefit me? Because, I've already got my income thing going on and I'm not going to have 25 years for it to grow. There's other resources this can be used for, which are phenomenal that once again can be utilized to go along with your retirement to reach certain goals, really regardless of the age. So we'll touch on that next
Okay.
week.
Well, you've
But
intrigued me now. We're definitely
yeah,
going to talk about that next
yeah,
week.
cool.
Okay. Well, let's do that because life insurance is a great tool for retirement. And Johnny has a whole toolbox that you sit down and you just talk with people and you try to understand where they are. You have those conversations. And life insurance plays a part in many retirement plans. So sit down with Johnny, have a call with him, go get a copy of his book, and sit down and talk with him. Retire at newheights.com is where you can get all that information and see how life insurance can play a part in your retirement so you can retire at New Heights.
Yeah, absolutely. Real quick, it's Christmas time. Instead of putting stuff on Christmas cards, man, you can borrow against your own money and pay yourself back from your index universal life policy with the Christmas presents, right? No interest. You
Absolutely.
actually make more money. So it's even a holiday cheer with a
That's right.
properly structured life insurance policy.
I
All
love
those
that.
grandkids you got. But we'll talk more about it next week.
Okay, we'll talk then, buddy. You have a great week, Johnny. Take care.
You too. Thanks, Mike.